This is the AI News Flash for May 14th, 2 p.m. UTC. First up, content delivery network giant Akamai Technologies has officially announced its acquisition of AI and browser security firm LayerX for $205 million. LayerX, an Israel-based startup, provides a browser extension-based agentic AI security platform that delivers real-time visibility and control over enterprise shadow AI usage of ChatGPT, Claude, and Copilot, along with prompt injection defense and sensitive data leak detection. Integration of Akamai's existing Secure Edge, Guardicore, segmentation, and Bot Manager portfolio with LayerX's browser layer AI security realizes Akamai's Zero Trust AI security completion vision. With 48% of security professionals predicting agentic AI as the largest attack vector of 2026, this acquisition symbolizes a major CDN's full-scale vertical integration into AI security, joining Cloudflare, Zscaler, Cisco, and Palo Alto Networks in the rapidly consolidating AI security market. Second, Amazon stock is surging toward the $3 trillion market cap club, driven by the success of its AI business. AWS revenue grew 29.7% year over year, cementing Amazon's position as a top AI infrastructure beneficiary alongside NVIDIA and AMD. The $50 billion strategic investment in Anthropic marks Amazon's transformation into an AI platform company, with large-scale adoption of third-generation Trainium AI chips and rapid growth of Bedrock Enterprise AI driving the three pillars of valuation. Amazon is poised to become the sixth company in history to reach the $3 trillion market cap, after Apple, Microsoft, NVIDIA, Google, and Meta, symbolizing the completed transformation of Amazon's business model from e-commerce to a full AI infrastructure company. Amazon is the largest beneficiary of the $4 hyperscaler, $725 billion capex boom in 2026. Its structural shift signals the decisive moment for institutional investor allocation in the second phase of AI infrastructure investment. Third, the latest CNBC survey reveals that 65% of U.S. workers have consciously avoided AI use for moral, environmental, privacy, and other reasons. Privacy concerns at 43%, environmental impact at 29%, ethical issues at 27%, professional integrity at 24%, and intellectual property rights at 21% represent multifaceted reasons driving structural expansion of active worker rejection of AI tools. As enterprise AI adoption accelerates, this signals the rise of bottom-up worker resistance. Gen Z shows particularly strong ethical awareness, fueled by criticism of the $4 hyperscaler, $725 billion capex booms electricity and water consumption, more than 77 AI copyright lawsuits against AI developers, and concerns over labor market disruption with cumulative AI-related layoffs exceeding 156,000. Against top-down enterprise AI push, bottom-up worker resistance is growing. The biggest bottleneck to AI adoption success is not technical, but employee receptivity, making worker AI literacy and governance the most critical enterprise AI debate of 2026. Fourth, Brazil's 2026 presidential election is drawing global attention as the first real-world stress test of the world's comprehensive AI regulation laws. Brazil's artificial intelligence law, the world's first comprehensive AI regulation enacted in 2024, mandates third-party audits for high-risk AI systems, watermarking of generative AI content, prohibition of AI-generated election deepfakes, and transparency reporting for AI developers, all to be tested in the October 2026 presidential election. Amid an anticipated fierce contest between the Lula administration and Bolsonaro faction, AI-generated deepfake disinformation risks reach unprecedented levels. This serves as a global AI governance enforcement test alongside EU AI Act, 38 U.S. state AI regulations in Colorado, Illinois, and California, and Senator Ted Cruz's FDA-style federal AI regulation bill in development. With mandatory AI content identification labels enforced on X, Meta, TikTok, and Google, plus Brazilian judicial authorities ramping up election AI misinformation crackdowns, global AI governance enters its most critical year, marking the decisive moment of AI regulations' transition from theory to implementation. Fifth, JPMorgan's global equity strategist has officially analyzed that the winners in global equity markets go beyond AI, signaling a turning point from the AI-only investment theme to diversification. With NVIDIA at $5.5 trillion market cap and the $725 billion hyperscaler capex boom symbolizing U.S. AI concentration. Questions over investment theme, sustainability are mounting. The strategist points to European financial services, Japanese AI memory, semiconductors, Indian IT services, and the monetization phase shift of China's AI trio Alibaba, Tencent, and ByteDance, suggesting rapidly emerging diversification opportunities. Amid Wall Street AI overheating concerns, including Michael Burry's short positions, Bridgewater's AI bubble warnings, and JPMorgan Assets' long-term value rotation, institutional allocation toward global diversification accelerates. Norway's sovereign wealth fund, Australia's superannuation, and Singapore's JIC all considering active allocation to Chinese AI companies validates this important view. The transition from NVIDIA monopoly AI semiconductor theme to AI infrastructure beneficiary stocks, AI application layer, and global diversification represents the most significant investment theme pivot of 2026, signaling a fundamental market structure transformation. That's all for this AI news flash.